What if I told you the biggest winners in the climate economy aren't necessarily the planet? Trillions of dollars are moving under the banner of sustainability. Governments promise transformation, corporations promise net zero, Wall Street promises opportunity. But when money moves at this scale, power shifts, and power never shifts randomly. Welcome to the Climate Ledger. Here, we don't just talk about climate change, we follow the money behind it, because the climate transition isn't just an environmental story. It's the largest capital reallocation of our lifetime, and today, we're uncovering who really wins in the climate economy, and what that means for you as an investor. The United States triggered the largest climate spending wave in history, hundreds of billions in tax credits and incentives. Private capital followed immediately. Asset managers began shifting portfolios toward ESG strategies. This isn't millions, it's trillions. And when trillions move, they concentrate. The first major winners, corporations that understand policy. Climate legislation doesn't just build solar panels, it builds balance sheets. Large firms with legal teams and capital structure their investments around tax credits. And when government reduces risk, corporate valuations often rise. Even traditional energy companies are adapting, investing in carbon capture, hydrogen, grid infrastructure, because transition spending doesn't eliminate incumbents. It often helps them evolve. The climate economy isn't replacing power, it's redistributing it. And no, it's not always the flashy electric vehicle startup that wins. Excitement grabs headlines, but incentives reward structure. The loudest companies aren't always the most profitable. The second major winner isn't building turbines. They're structuring capital, green bonds, carbon markets, transition funds. Climate change has become an asset class, and financial institutions earn fees whether markets rise or fall. But if finance collects steady returns, who absorbs volatility? When policy changes, when subsidies expire, when politics shift, markets react, and retail investors often feel it first. Smaller startups without cheap capital struggle to compete. Communities promised green jobs may wait years. Taxpayers fund incentives that flow upward, and hype cycles inflate faster than fundamentals. Climate investing isn't the danger. Blind investing is. Here's the twist. The climate economy doesn't have permanent winners. It has positioned winners, and positioning depends on understanding where policy reduces risk and where capital follows that reduction. The real long-term winners may not be the most exciting companies. They may be grid modernization firms, industrial manufacturers, battery supply chain operators. Infrastructure isn't glamorous, but it compounds. The climate transition isn't only environmental, it's geopolitical. Energy independence, supply chain control, domestic manufacturing. Capital is flowing toward strategic resilience, and resilience attracts long-term investment. And no, this does not mean you should throw your savings into the next green moonshot. If a company survives only because of one subsidy, that's dependency, not sustainability. The next decade will reshape energy systems, supply chains, manufacturing, transportation, and portfolios. The question isn't whether capital will move, it's whether you understand where it's flowing. Headlines tell stories, capital tells truth. The investors who win in the climate economy aren't chasing narratives, they're studying incentives, because incentives shape markets, and markets shape wealth. The climate economy is not a morality contest, it's a structural transformation. Some will panic, some will speculate, and some will position intelligently. If you want to understand how climate policy reshapes markets and future wealth, subscribe to The Climate Ledger, because in this transition, following the money may be the most sustainable strategy of all.